I think one of the biggest challenges we find is that the pairing, right? So a seller, they want to exit and they want a 1031 out. However, they don't know who can I 1031 with.
What's the biggest frustration when it comes to capital gains tax and the 1031 exchange as it pertains to a number of things? It could be for you guys exiting out of assets. It could be for someone who has a cryptocurrency or a business that wants to invest with you guys, Julie, but it's subject to capital gains tax in order to get into the real estate syndications that you structure. What do you found to be the biggest frustration as it pertains to large exits with capital gains tax and the 1031 exchange?
I think it's twofold. And I think you and I, when I saw each other in person a couple of months ago, I think we spoke about this a little bit and it was so much fun. And I love what you offer and I love how your mind works. And I can't wait for you to come on my show so I can pick your brain and extract more. I think one of the biggest challenges we find is that the pairing, right? So a seller, they want to exit and they want a 1031 out. However, they don't know who can I 1031 with. And now that creates so many problems because now we have to have a TIC structure, a tenants in common structure. And now that creates, another legal, like greater legal fees. And I have to even find a team that's willing to receive my money. And now it just changes the structure so much. I think that right there is the biggest headache that people face. And then identifying, right now, we're finding that the debt markets are, very tight. And so there are instances, we're in an instance right now where we're supposed to be closed already. And so what happens to my 1031 situation? I committed, I identified my properties and this still isn't closed. I just lost, what's going to happen to me as a 1031er. So I think these are some of the sentiments that I hear.
So we let's call these the shotgun weddings, or even like your hair on fire running around because you have this tax liability and you have this deal you want to close, or there's no pairing at all. Like a business cannot 1031 into real estate. You also cannot 1031 cryptocurrency or primary homes, or you're just running out of time and you're just running out of options, right? And so that's why we do offer the deferred sales trust. It's an alternative to a 1031 exchange. We have a saying around here that says, friends don't let friends overpay in a 1031. And the idea is that you're making prudent investments that are diversified. They can, by the way, go into liquid investments and illiquid investments. There's no timing restrictions. There's no like-kind requirement. There's no debt replacement requirement. I think that gets overlooked a lot. And a 1031, Julie, you have to replace the debt. Right. Well, think about that. If you had debt at 3.5% and you sold at a great price, but now debt's at 6.5%, 7%. I mean, that whole concept of having to replace debt for debt, and I mean, that could just sink the deal. Right. And just because of the tax. Right. So we think the deferred sales trust was created for times like this to be able to diversify, to get out of debt, don't have to replace any debt, and to be able to selectively buy deals at any time, meaning the market can actually shift and go down and you can sell high and buy low. Anyways, if people want to learn about this, you can go to capitalgainstaxsolutions.com, capitalgainstaxsolutions.com. We wrote a book called Building a Capital Gains Tax Exit Plan. So you have options when you're exiting. Go to capitalgainstaxsolutions.com.